I think they did really good as per our expectations. I'm sure the Nvidia obsesses and might be disappointed given the magnitude of the beat, which we had called out to be in the single-digit range, and especially against the lofty, unsustainable expectations that some of the, again, Nvidia obsesses have been forming. But fundamentally, in terms of long-term, in terms of the competitive landscape, everything remains intact. We don't see any big risks out of this earnings so far.
Do you see any softness when it comes to the outlook? Even though it exceeded some expectations, it didn't exceed the loftiest expectations. Are you seeing signs of softness with its customers?
I wouldn't call it a softness in terms of demand. I would rather call it more of a timing. I mean, in the given last 30 days, we have come to know about the Blackwell delays, right? But as we had called out in our preview, there's enough demand for the Hopper series, and the supply for that has come along. So they have the ability to ship more and more to this demand, which kept them intact, and the guidance still came to a beat. Of course, I think the delay might actually push out the magnitude of beat which we would have expected into 25, calendar 25, which might actually drive increase to the upside of 25 numbers as we get more details on it.
Help contextualize this for us. Nvidia expects to ship several $1 billion of Blackwell revenue in the fourth quarter of the year. I feel like, Carol, I'm parsing a Fed statement here.
It feels kind of vague.
What does several mean, Kunjan? Is that a lot, or is that disappointing to investors?
I wouldn't call it completely disappointing. Again, given what we came to know over the last 4 weeks, when we were working on the preview 2 weeks ago, we thought it will be very little volume. So this several billion actually is good in a way and comforting that, okay, there will be some shipment and it's not completely delayed until the first Q fiscal quarter. So I wouldn't call it completely disappointing.
So we are watching big tech falling after Nvidia, their results. As I mentioned, the NASDAQ 100 E-mini futures in the aftermarket down 1.6%. I'm looking at the QQQ. That also, we see it down about 0.5%. I mean, when it comes to the AI story and the build out and the spend, you sound really comfortable with what we've got from Nvidia. That narrative, that story, that actuality is still intact. Is that a fair assessment of how you see this?
It is, and given we look at the fundamentals, especially from a long-term perspective and not the magnitude of beat and raise quarter to quarter, when you look at this earnings season, almost all of the hyperscalers, the big internet companies, the big cloud players actually announced a beat to their capex and almost across the board to their revenues, right? So that again validates like the demand is not slowing. Nothing has changed in the last 2 weeks just given the Nvidia results. So I agree with your comment that we do feel comfortable around the broader dynamic and the demand tailwinds for the AI chips.
So one of the things we just talked about with our Ed Ludlow too is when you look at the supply chain function on Nvidia, their top customers, it's kind of a who's who of big mega cap tech companies. Microsoft is their number one customer. 45% of their CapEx goes to Nvidia. Meta, number two customer, 41% of their CapEx spend already goes to Nvidia. Super Microcomputer, which we've been talking about a lot in its woes or alleged woes, that one about, I don't know, a big chunk of what they spend also goes to Nvidia. Alphabet is another one, almost 15% of their CapEx goes to Nvidia. So you have enough confidence that those companies will continue to spend. They are so important, right, to the Nvidia growth story. So as long as you hear from them that they are spending, you're pretty confident.
Exactly. As long as we don't see any negative feedback from them publicly, the confidence remains. One more point to highlight from the CFO commentary letter. This quarter, their percentage of data center revenues from the cloud actually came down to 45%. It had been running over 50% over the last year. So this is, even though on a magnitude terms, a small victory, I still see it as a positive direction that they're diversifying slightly, slowly, but away from the big cloud customers, and their enterprise and vertical segment is growing significantly faster.